Hey everyone, Andrew here with a new YouTube video. Still in Dubai and want to talk to you guys about how's the best way to trade. So I want to change this channel into moving forward more about trading because that's what I'm passionate about. That's what I build my career on. And one of the most common questions that I get as a trader and a mentor of my community is, what's the best way to approach trading? Should we scalp trade? Should we day trade, or should we swing trade? So I've been through scalping and now day trade, and I will explain each of one, and I believe there's phases in each trader's career. So as anyone, when you start trading, you don't really understand how the pair moves, why it moves, how you can catch moves, and that's perfectly normal. And the way I organize my community is in that way that we're gonna have our psychology, and we have our psychology in check before actually understanding how the market moves, because one very important thing is that every trader is different. So what works for me will not work for you that is watching, and it's not going to work for anyone else, right? Each of us has advantages and disadvantages, so we need to find the trading style that works for us. And that was my approach to teaching. I didn't teach a strategy. I taught people how to understand the markets, why it moves, when it moves, and how you can identify that the moves are about to happen. And I've seen very good results inside my community. Our students have been killing it just because of that. I don't throw strategy in their face and it's like, learn this, right? No, learn how the market moves, because that in the long run is what's going to make you a profitable, consistent trader, and you can trade any markets, right? So that's what I did, and it worked very well. So now let's go through the phases of trading. So we have scalp trading, which means trading the lower time frames. For me, that means trading the lower time frames, having a bigger risk reward. So by big, I mean 1 to 3, 1 to 5, 1 to 10, and having lower stop losses. So stop losses ranging from 5 pips, 3 pips, 2 pips on Euro USD, for example. So let's say you're taking a Euro USD buy, having 3 pips as a stop loss, and you target a 1 to 10. That's a 30 pip move. That's usually a good range for New York, so you can catch that. And that's how I used to trade 2-3 years ago, and I was even trading the seconds time frame. Like, imagine me trading the 5-second time frame, and that was fun because you had some insane trades. Like, you had 2 pip stop losses, catching 1 to 10s on Euro USD. That was a crazy time, but it has very big disadvantages in my opinion. So you have advantages because you have high risk reward, you have a very good return. You can make 20R a week, which is crazy. If you're risking $100, you make $2,000 a week just by risking $100 per trade. So you have very high potential of catching a lot of moves, catching the beginning of moves, and even swinging those moves with such a little stop loss. You're very precise and you can make a lot of money. So I made a lot of money during those times, but there's also disadvantages that, in my opinion, combat these advantages. And you have the fact that you need to stay glued to the screen. Trading the 1 minute time frame, the 5 minute time frame, and even the seconds time frame, you need to have your eyes stuck, glued to the screen. Otherwise, you cannot trade, because you cannot enter a trade with 2 pip stop losses and you enter the trade and then you start doing something else. You can't, because you need to follow that trade. You need to go break even at a 1 to 1 or a 1 to 2. You need to target. You need to see how the structure shifts, because a 1 to 5 is 10 pips. That can happen in 2-3 minutes, right? So if you're not paying attention, you cannot manage the trade. You cannot be a successful trader if you're not glued to the screen. So you lose a lot of time, because you need to watch the markets every single time. And also, to catch those kind of opportunities, you need to stay active, you need to stay concentrated. Trading the whole London session, like 3 hours, you need to watch every single candle on the 1 minute time frame if you're trading that. And you need to trade that to catch those insane risk rewards. So that's the big thing. You're gonna lose a lot of time, and it also doesn't help with concentration, because our mind can only concentrate for a few moments a day, a few hours a day max. You cannot be concentrating for 6 hours on the charts. It's not humanly possible. And then you have the fact that for that kind of trading, you need a very good broker with good executions and no slippage. Because if you have a 2 pip stop loss and you get slipped 2 more pips, you're doubling your risk. You add commission to that, your risk goes from 1% to 2.5%, and that just ruins the whole trading for you. And most of us are trading platforms, and believe me when I say that, trading the lower time frames that way with low stop losses and big risk rewards is not possible with platforms, because you don't have very good execution, and you're gonna have slippage. You're gonna have slippage on your entry, and your exit, and you're also gonna have a big commission. So if you want to risk 1% with the 2 pip stop loss, you'll end up losing 3%, something around that. And trust me, because I've tried that in the past. Even if you have your good execution, you're gonna get slipped because you're using very big lot sizes, and with that comes slippage. So even on EU, I've been slipped, because you get slipped anyways, like 1 pip on EU. But if your stop loss is 2 pips, getting slipped 1 pip, that's 50%. 1 pip on entry, 1 pip on exit, that's 2 pips, that's double your risk, as I said. And the next thing is commissions, like I said, because you're gonna be trading big lots. If you're risking, let's say you have a $100,000 account, if you risk 1%, that's $1,000. If you risk that on Euro USD with 3 pips as a stop loss, your lot size is gonna be 33 lots, something like that. And 33 lots on an average of, $5 per lot, that's gonna be like $160, which is again 0.16% added to your risk. Add slippage, turns to 2% very fast. So that's the disadvantages you have trading the lower time frames. And to be honest, you can only do that if you have a very good broker with very good execution and no slippage and low commissions, which is very hard to find unless it's an unregulated broker. And there are successful people who trade that way and they make it work because you learn to add all of that and account for all of that. But I don't think it's sustainable, because another big thing of that is psychology. In order to trade profitable that way, your win rate is going to be very low. Your win rate is probably going to be around 30 to 40% when you're trading, let's say 1 to 5 average risk reward, right? And 2-3 pip stop losses. You're going to get a lot of losses, you're going to get a lot of break evens, which again, all the commissions add up, and you're going to have to let your winners run to have that, overall profitability of your trading plan. So it's very hard when you're taking 3 losses in a row and then you're taking 2 break evens to let your 6th trade run to the whole take profit of 1 to 5 or 1 to 7. It's very hard to let that trade run, because that trade is going to go up and down, and it's going to fluctuate a lot. And even if you're risking 1%, imagine a trade that goes into 6% profit and then goes back to break even. That's very hard on our minds and our psychology. So even for myself, because I was so experienced, I managed to make it work for a few months and I was very profitable, taking everything into an account. But at some point I got tired. I couldn't focus anymore, I couldn't concentrate, and to be honest, I was done with it. It wasn't bringing me any pleasure, it was only bringing me bad vibes and a lot of stress, because I had to get all those reasons. I was glued to the charts, a lot of break evens, my wins had to go. And again, when you're down 4%, you lost 4 trades in a row, and your, let's say, fixed risk reward is a 1 to 10. Once your trade goes into 1 to 5, you're gonna close that because you want to recover your losses, and that just messes the whole trading plan, right? Because out of 10 losses, let's say you catch 2 wins, 1 to 10s, so you're making 12%, 12R, and if you let those trades run. And also it's the fact of luck, right? You can have a trade going 9.5% and then reversing all the way to break even, and that, just trust me, you don't want to be there. So there's only a few handful of people who can do that consistently and profitable, and I wasn't one of them. I couldn't. I did it for a few months, but then I had to change my style because it was not good for me. So that's when I got into day trading and using bigger stop loss. So I went from trading the seconds time frame, the 1 minute, the 5 minute time frame, having 3 pips as a stop loss on EURUSD, to 20, 25, 30 pip stop losses on EU. And I did that change mainly because I scaled up my prop firm capital. So I scaled up to $6.7 million in capital. And if you're trading that kind of capital, you cannot trade 5 pip stop loss. The lot sizes are going to be insane. The risk is going to be insane. So I wanted to find something that works good for me to make 2% a month, 3% a month, right? So 3R. And I thought, why not try to aim for low risk rewards and improve my win rate? And that's when I really managed to scale up a lot and make a lot of money, because now I'm going from all these trades, taking 15, 20 trades a week, to taking 1 trade a week, 2 trades a week max. And that was a game changing for me, because again, my usual aim, and these are also for the trade ideas that I sometimes send to my community, is the first take profit is a 1 to 1, and our second take profit is a 1 to 2. If you catch a 1 to 2, that's absolutely amazing. Like, even if you're trading like $2 million in capital, if you hit a 2% trade with a 1% risk, that's 2% profit, that's 40K. Minus a profit split, end up around 32K from 1 trade. That is an amazing return, and you only need 2 trades a month, right? So I went from having such a high stress to removing all my stress and only focusing on very good setups with high stop losses. And why did I introduce those higher stop losses? Because if I have the idea that, let's say, EURUSD is gonna go long, I want to let it run, right? I don't want to be checking the charts all the time. So if I have a 25 pip stop loss and a 25 pips as a take profit one, I can let that trade run. So my usual trades run for a day or 2 days max. I never had a trade really running for 3 days. I will end up just closing it, but just removed my trade frequency by a lot. And that really helps with your mindset and psychology, because you're not trading as much. Your only focus is on catching those easy returns, because anyone can, even if you flip a coin, you're gonna make 2% a month if you reach 1%. It's impossible not to. So if you just focus on the highest probability trades to make that low return of 2%, so 2R your risk, it just turns the game and becomes easy, because you wait for the right opportunity, you give it room to breathe, and you just target a 1-to-1, and then you improve your win rate. So you have your win rate up at 70%, 80%, and just helps you really feel like a good trader and trade better. So that's when my trading really skyrocketed, because I made those changes. So if you want to believe me and apply this, do it. If not, then find what style works for you and use that to scale up your capital and make some more money. But in my opinion, that's one of the best ways to actually trade. And then moving on to the third part of, I think, a trader's career is when you get older and you start to have less and less time to actually stay on the charts. And that's when swing trading becomes your main priority. And by swing trading, I mean even increasing your stop losses to 50 pips and using the higher time frames. So using 4 hour, daily, weekly to take those trades and be in the trade for days, for weeks. And I believe that's where I'm probably headed, just waiting for a good opportunity every single month and just swing trade that, enter the trade and forget about it, and then have some alerts and check it when it's there basically. And that's just the minimal amount of stress that you can have trading, because you're only checking the charts maybe once a day for an hour, and you went from staying 6 hours on the charts to 1 hour a day just to look on the pairs that you want to trade, setting alerts, and then executing the trade when it comes there. And again, I believe it's a scale in a trader's career. So you start up with low capital and you just want to make money, so that's when you really trade a lot and try to maximize your gains. And then you reach the midpoint where you made some money, you have some capital, and you want to play it a little bit more safe to really increase your growth and capital. And then comes this last final form of a trader where you have all this capital and you just want to minimize the risk and have some good return. So that's when you trade twice a month, you make 2%, and 2%, or let's say $10 million, a lot of money. That if you can reach that point, it just becomes, trading becomes like a side thing, and start to have a lot more time to do other businesses, spend time with your family, and do whatever you want. So that's the point where I'm trying to reach, trying to gain all my knowledge, increase my capital by a lot, and then just reduce my trade frequency by a lot, to the point where I have a few trades every single year. But those trades bring me a lot more money than those traders that spend 6 hours on the charts. So I believe that's the perfect growth of a trader, and try to follow this plan, try to find which step you are at, and try to maximize your understanding. And again, all these 3 steps in a trading career, trading path, have one thing in common: reading price action, understanding when the market moves, why it moves, and where it can move. That's why I only focus on that when teaching my students. I don't teach them how to trade the lower time frames. Yeah, I show that, but that's not the focus. I don't teach them how to swing trade, right? I teach them how to understand the market and how to understand the moves and how you can catch those moves on any time frame. And once you understand the concepts, behind the market, that's when it really all starts to click, and then you find your trading style, your trading time frames, your trading pairs, and you keep growing your skill and improving yourself. And then you choose the path where you want to go. Maybe the path that I showed you guys, maybe that's just for me, maybe for other people, they want to trade the lower time frames all their life. That's perfectly fine, as long as you're not getting stuck at break-even point or losing point. You need to be profitable, and if you find something that's very profitable for you, keep doing it. And then try to also take care of your psychology, your mind, right? Because that's the most important thing, and also your time. So to end up this video, thank you guys for watching. If you want to join my community, go over to wap.com/nfx. We have hundreds of students that have insane results, so hope we'll see you there. And don't forget to like, subscribe, and leave a comment down below. Let me guys know what trading style fits for you and what you want to see from me next. Thank you guys for watching.